Hey, how's it going, guys? Hope everything is going well. I want to do my last video in my 20s. Tomorrow I turn 30 years old. So, guess I'm growing up. Anyways, guys, wanted to talk to you about gold and negative interest rates. Someone left a comment the other day, why would gold go down when you have negative interest rates? What I was referring to is if Janet Yellen were to manipulate the 10-year yield below 0%, that would mean disastrous things for economy. The stock market would crash, gold prices would crash, commodities would crash. People say, why would that happen? That doesn't make sense because you look at low interest rates, increasing money supply in places like Argentina, right? You get hyperinflation. Now, if you look at Japan right now, it's a very good example. They went negative. This was in December of last year. And the yen was at 124, Nikkei was 20,000. Fast forward 6-7 months later, Nikkei is 15,500, the Japanese yen is at 100. You've seen appreciation in the yen, and then you've also seen the stock market go down. Although I see a rally in the Japanese yen to the downside, shorting the yen, and I see as a result of that the Japanese Nikkei go up, structurally they have many problems, and I wouldn't be surprised if we see the Nikkei go 2,000, 3,000 points lower from where it is right now in the next 6 to 9 months. So if you look at Japanese yen and the Nikkei and their overall economy, the negative interest rates, what do they do there? When you have the 10-year yield below 0%, well, you slow down the economy. You are essentially taxing the bondholders. And when you tax bondholders, that does not create economic growth. And then 3, the banksters need higher interest rates to thrive. Like you saw from 2003, 2007, right? You saw interest rates going up. It was actually 2003, I believe, to 2006. You have rising interest rates. The bank stocks did well in the United States. And that's what the banksters need. They make money when interest rates go up. Now, fast forward to the United States, or let's look at the United States. We had a jobs report that beat today, and if this trend continues for the next few months, I don't think they're going to be going negative unless you see a European debt crisis situation blow up. If that does happen, then Janet Yellen will try to go negative, and it's going to be the wrong policy move in my opinion. But for instance, what if we don't have the European nightmare situation and the economy seems to slowly but steadily improve, right? I get it. The jobs numbers, they're rigged. The government data is rigged and all that. This is what the market looks at. This is what the traders on Wall Street look at. International capital looks at that as well. So you see interest rates rise like by 25 basis points. That would essentially be bullish for gold, in my opinion. So this is my thoughts on negative interest rates and gold. You have higher interest rates, you're going to see more velocity of money, you're going to see an increase in economic growth, assuming that you don't raise taxes. You want to look at example 2003, 2007, right? Interest rates are going up, and then you also had tax cuts. That was bullish for the stock market. This was bullish for gold, bullish for oil, and whatnot. Now, if you want to look at the 1970s, although you didn't have a rising stock market, what you did was you did have rising inflation, and you did have higher gold prices. And this was in an environment where interest rates were going up. So that's why I'm saying when you have interest rates going up, that will be bullish for gold, in my opinion. So the more that we raise interest rates, the more bullish it would be for gold and silver. Now, I want to look at the markets today. Just want to do a quick wrap up. I want to look at the price of gold today. I did a video the other day, gold smackdown coming, and it could still come. And it's primarily the yen, the Japanese yen that I'm looking at. Look at the Japanese yen in November, December, right? It was at 124. Right now it's at 100. You've seen roughly a 20% depreciation of the yen in that time frame, and then gold at its low was like 1,045, and right now it's 1360, close to a 30% return. So there tends to be correlation with the price of gold and the Japanese yen. And what I saw earlier today is peculiar activity. I saw the yen started to sell off, and then gold prices were going down. I was like, okay, good. Some of my gold short positions were benefiting, and my gold long positions were not benefiting at that time. So some were going up, some were going down. But then I saw a reversal in the yen, and I'm like, okay, it's going up. So let me get rid of one gold short position. And the thing is, with this Japanese yen, if it starts to sell off, which I said earlier in this video, I still have a gut feeling that it will sell off. It just seems a bit oversold at this moment. You're going to see gold prices take a small correction at that time. And it's all about the yen. And what I also found interesting was that the 10-year yield in the United States is 1.36. So you had the jobs beat, but you didn't see the rates go up. You saw actually like from 7:30 Central Time in the morning to like around 8:30, or maybe it was around 8 o'clock Central Time. I actually saw on my phone that interest rates were going up in the United States. It wasn't that much. It was by like 2 basis points. It was nothing. It was like 1.38 to 1.4, 1.41. And then I said, okay, gold price is going to go down. I saw the yen sell off. I saw, okay, gold price is going to go down. But then I saw a reversal in that. And this market seems very eccentric and weird, that you've seen the market go up, but bonds are not selling off. And in addition to that, you're seeing risk off in the Japanese yen. So really, really, really interesting. And I also look at Deutsche Bank. Deutsche Bank was up. I have some stock of that, even though I think it's crap. So ultimately, I'm looking at a few things, right? You could look at the employment numbers. You could look at the Japanese yen, risk on, risk off trade, but that hasn't been following the markets in general. You could look at bond prices. Those need to sell off to show that, hey, we are getting better economic news, economic data, and whatnot, even though I believe that all this data is crap. But this is what the market looks like. So those are my thoughts on the market. Tell me what you think about it. We're almost at all-time highs again. It just seems that we're still going to be in a choppy area, in my opinion, unless you start to see Europe improve, Japan improve. That could give confidence to the worldwide markets that, hey, things are getting a little better than what everyone's presenting it to be. Anyways, guys, thanks for listening. Talk to you later, and hopefully my 30s are going to be great. Thanks. Talk to you later. Bye.